How's it going out there, everybody? It is Josh Rofer, your home finance and mortgage expert. Just wanted to touch base with you real quick on a couple of things I'm seeing out there in the market. Definitely have increasing home prices, increasing interest rates, and this is having a significant impact on the amount of buyers and the competition that's out there when it comes time to make those offers on those houses. So if you're in the market, if you are a realtor who has a client in the market, you definitely need to pay attention to this video because I've got one recommendation that could improve your chances of getting your next offer accepted. All right, so we're definitely in an explosive market right now. Increasing interest rates, increasing values in homes, seeing a lot more of those buyers come into the market. That's a great thing for business, great thing for the real estate and the economy. But when it comes to your business or getting your offer accepted, it can be frustrating because you might make multiple offers on that property and get no offers accepted. So I have something that you can do right now to improve your chances of getting your offer accepted. There's nothing worse than going out, searching for houses, finding that one dream home. This is the one, right? You submit that offer only to get beaten out. Now, isn't there something we can do to improve your chances of getting your offer accepted? There is. Not sure how familiar you are with the differences between a pre-qualification, a pre-approval, and a credit approval, but there is a difference, and it could be the difference of getting your offer accepted. So just a quick rundown of what the difference in those three items are. First is going to be that pre-qualification letter. A pre-qualification letter is that letter you can get online. You go to a online search engine, you type in mortgage, you fill out some basic information. It's going to spit back, hey, you're pre-qualified, congratulations, here's what you're approved for, those types of things. Now, you and I both know that that letter is ultimately as good as the piece of paper you print it out on because there's not really much background or due diligence there. So you want to definitely go one step further and get that pre-approval letter. And what a good pre-approval letter is going to consist of is filling out that uniform loan application, getting all of the assets, liabilities, reviewing the credit, getting to know what the financial picture looks like, getting a better idea of what the affordability is, knowing with confidence that once that offer does get accepted, that mortgage is going to go through. But again, with the market shaping up the way it is this summer, you need to have a competitive advantage. Your competitive advantage is going to be the credit approval letter. So the credit approval letter is going to be the same process that you go through for a pre-approval. Fill out the loan application, have that conversation with the mortgage loan officer, but we're going to go that one extra step and we're going to actually collect some of the financial information, those documents associated with assets, liabilities, credit. We're going to underwrite the file. So we're going to underwrite the file previous to you actually having an offer out there or even having a property picked out. Now, where this comes to impact significantly, two big things. One is from the seller's standpoint, they're going to look at a pre-approval and a credit approval. They know that the credit approval has already gone through the underwriting process, so a lot less chance of having the deal fall apart because of an underwriting issue. The seller and the selling party's real estate agent are going to have a lot more confidence accepting that credit approval letter as opposed to a pre-approval letter. Now, the other thing is it's going to dramatically shorten your time frame if you need to. So again, we're looking for any edge here in the market to get that deal done. And it could be as simple as closing that loan in 21, 28, 30 days, whatever it might be. Just being able to move that closing time frame up a couple weeks could be the difference of getting your offer accepted. Again, with a pre-approval, you're going to need to go through the underwriting part. So that's going to extend the time frame a few weeks. If you get a credit approval, you might be able to make that offer and have a much shorter time frame. And from a seller's standpoint, they may be trying to transition to a different house. They need to line up their sale date on their house they're selling and their purchase date on the new house. So those time frames can make or break a deal. So definitely two things to consider: shortened time frame, a lot more confidence in the approval of that loan in the end. So those could improve your chances of getting your offer accepted. So there you have it, guys. If you're in the market, getting ready to make an offer, you need to get that credit approval letter as soon as possible. It's going to give you a leg up on the competition, because once you find that dream home, you don't want to lose it. Take the time, get that credit approval letter, give yourself an advantage. And as always, if you found value in this video, share comments below, and please forward it on to anybody else you know who might find it valuable as well.